Good morning, everybody, and welcome to this webinar, wherever you are. Good morning, good afternoon, good evening. I'm Olaf Weber. I'm a professor at the University of Waterloo, and I am the moderator of this meeting, and I will let you know about the agenda. So welcome and thank you very much for joining us today. Our webinar today is on Asian Development Bank's development outlook, financing a green and inclusive recovery. And also, I just want to let you know that we are recording this webinar. This event is co-hosted by the University of Waterloo School of Environment, Enterprise and Development SEED, the Asian Development Bank's North American Representative Office, the International Development Research Center, IDRC, and Mennonite Economic Development Associates, MEDA. For today's event, University of Waterloo's Dean Jean Andre will first provide introductory remarks. Then ADB's Chief Economist, Yasuyuki Sawada, will provide a presentation on the Asian Development Outlook. Following the presentation, we will have a discussion featuring comments from IDRC and MEDA, after which we will finish off with some Q&A if time allows. Attendees are encouraged to submit questions via the Zoom Q&A function. So you see below in your screen, there should be a Q&A panel. Now to kick things off, let me first introduce our Dean, Jean Andre, for her introductory remarks. Jean Andre.
Thank you so much, Olaf. Well, it gives me great pleasure to represent the University of Waterloo in bringing opening remarks to this important event. And I do so as the Dean of the Faculty of Environment at the University of Waterloo, which is the host for the Canadian chapter of the Sustainable Development Solutions Network, and also the home for our Masters of Development Practice, which is part of the Global Association for Programs of the same name. In these and other activities at the University of Waterloo, we look at environment, society, and economy in an interconnected way. With respect, before we move into the program, I would also like to acknowledge that the University of Waterloo is situated on the Haldimand Tract, land promised to the Six Nations of the Grand River, and land within the traditional territory of the Neutral, the Anishinaabe, and the Haudenosaunee peoples. We have a responsibility to acknowledge and understand this history and the current experiences of First Nations, Inuit, and Métis people, and for this understanding to inform the work that we do. As we move into the agenda, I just want to make a remark or two about this journey that we're on. I'm very excited because today's event is one of hope in its messaging about how recovering from the global pandemic that we've all been burdened by can have a positive outcome enabled by the private and public sectors, and that the result can be a green and socially impactful set of outcomes that reduce vulnerabilities and increase resilience, sustainability, and inclusivity. There's probably been no other time in the recent history of the world where hope has been more important. The presentation today is being given by Dr. Yasuyuki Sawada, who is the Chief Spokesperson for the Asian Development Bank on economic and development trends, leads the Economic Research and Regional Cooperative Department, and publishes their flagship knowledge products. Previously, Dr. Sawada was professor in the Faculty of Economics in the University of Tokyo, Japan, and he also previously worked at the ADB Institute in Tokyo and served as a consultant for various projects at the World Bank Group. It is our privilege to have you join us today, Dr. Sawada. So over to you with no further ado.
Thank you very much, Professor Andre, and thank you very much, Professor Weber, for a very nice introduction. Let me upload my slide. Okay, I hope you can see my slide. So good day, everyone. Good morning in North America, good afternoon in Europe, and good evening in Asia. Thank you very much for having me today. It's my real pleasure to visit the University of Waterloo, even virtually. So today I'd like to share with you main key messages of our flagship report, Asian Development Outlook 2021, which was released around a month ago. And my presentation will be composed of basically two parts. First, I'd like to track Asia's past 1 year and also development prospect. So that's the first part. And secondly, I'd like to devote time to talk about medium-term recovery issues related to social recovery, inclusive recovery, and green recovery. So this is a basic composition. And so let me start by summarizing 5 key messages of Asian Development Outlook 2021. First, renewed COVID-19 outbreaks show pandemic is far from beaten, and the vaccination plans are still in very early stages in Asia. So in my presentation by Asia and Pacific, I mean 46 member countries and economies of Asian Development Bank. I mean developing member countries in Asia and Pacific. So basically developing countries in Asia. So first one is COVID outbreak is still far from over. And secondly, recovery paths have been very diverse as export boost growth in some economies while containments and travel restrictions restrain the recovery in other countries and economies. Thirdly, developing Asia's growth will rebound to 7.3% in 2021, and then next year, 5.3%. Inflation will be remain muted at the 2.3% this year and 2.7% next year. Fourth, the main risk still stems from the pandemic, including renewed outbreaks or delayed vaccine rollouts. And finally, but not least, focusing on medium and long-term issues, this report's theme chapter, Financing Green and Inclusive Recovery, documents rapid rise of green and social finance and the positive impacts of these finance can bring. We will cover this in a separate second half of this presentation. So now let me summarize evolution of pandemic in Asia and also vaccine rollouts. Second chart showing number of cases per million population in sub-region in Asia and Pacific. COVID cases in developing Asia peaked at 106,000 last September, as you can see in blue line. And then, black line shows the overall Asia. And successful containment measures cut the number to 32,000 by end February 2021. But in part, because of the new variants, cases surged again by end March. As you can see, red line is South Asia. As you know, India has been facing a really serious resurgence of a pandemic. So actually, Asian Development Outlook 2021, we have a cutoff date, end March, for growth forecasts and different numbers. But after that, we see surge in number of cases, especially in South Asia and overall Asia. So this is the evolution of pandemic. And the right chart showing vaccine rollouts. As you can see, there are quite big variation within Asia. Many economies are facing difficulties in procurement as well as the deployment of vaccines. Handful of small economies on the top on the right charts, such as Palau and Maldives and Mongolia, we see successful rollout of vaccination. but most large regional economies have not really rolled out substantially. On average, developing Asia has administered 20.7 doses per 100 people so far, and this is below the global average of 22.9 doses per 100 people. So these are the evolution of pandemic and vaccination rollouts. And as you can see, still pandemic is far from beaten. So now let me quickly review what has been happened to the regional economies last year, 2020. So here, out of 46 developing member countries and economies of ADB, we put the 10 economies data, largest economies data. And for each economy, we have two bar charts. First bar is for Q1 to Q3, first quarter to quarter 3, 2020. Second bar stands for numbers for fourth quarter. And the yellow dot shows the Q1 to Q3 GDP growth, and white dot shows the Q4 GDP growth. And almost all economy, you can see yellow dots remain very low level or negative, but the white dots you see much higher than yellow dots. That means that towards the end of last year, most of the large economies in Asia really achieved a recovery, strong recovery. And inside of GDP, we can decompose from a demand side. Consumption shown in the blue part, and orange part is investment, and gray is net export. As we can see, strong recovery in the domestic demand, consumption blue, and investment orange is a source of recovery. This one can be seen, especially in China, People's Republic of China, left end bar chart. We can see Q4 number is quite high, 6.5% growth year on year, and which has been driven by consumption, domestic consumption blue, and domestic investment orange, as well as net exports gray part. And indeed, gray part shows the very strong recovery, not only for China, but also East Asian countries and Southeast Asian, some of the Southeast Asian countries. So now let me zoom in this external part, as well as manufacturing recovery, which really leads to recovery of export. So second, so this chart, the left chart, shows the manufacturing purchasing managers index. So this is a frequent economic indicator, and also up-to-date indicator. We can see recovery is really supported by robust manufacturing revival, left chart. So purchasing managers index PMI for manufacturing, blue line is global PMI, global recovery. We see a very strong recovery towards the during the second half of 2020. And black line is a PMI for developing Asia, excluding India and PRC. Manufacturing activity really increased steadily through the second half of 2020, as we can see from the left chart, and stayed in expansionary territory in early 2021. So strong recovery of manufacturing production. The upturn in manufacturing activity has gone hand in hand with the strengthened trade, as we can see from the right charts. Global and regional exports, showing the black line and the green lines in the right chart, shows a strong recovery in the second half of the last year. And the PRC, shown in red line in the right chart, in fact, we see a surge in export for China. So actually, region's export recovery was really strong. First, driven by export of medical supplies and PPEs, as well as later supported by export of electronics products. So this is the really overall trend, especially in East Asia and some Southeast Asian economies. Having said this, Central Asia and South Asia didn't really follow this trend. So there is quite a diversified trajectory of recovery. So now let me briefly mention about the other external front, remittances. So left chart shows the remittances in Asia last year. Actually, remittances in this Asian Pacific were also relatively resilient and did not really collapse by 20%. Some had forecasted at the initial stage of pandemic. In 2020, developing Asia's remittances were overall actually up 1.4% year-on-year basis, slightly increased. And also from the left-hand side chart, some countries such as Bangladesh, Pakistan, we see a really strong increase in remittances inflow. But other countries, Central Asian countries in left chart, such as Tajikistan, Uzbekistan, Armenia, Georgia, we observe substantial decline. Although these countries remittances account for a large share of income. Unfortunately, tourism shows a little sign of a bouncing back, as we can see from the right-hand side chart. Tourist arrivals have remained depressed since April 2020 and have risen only in Maldives, shown in a red line. So Maldives red line shows the sign of recovery. And Maldives actually opened up the country last July. But even in Maldives, tourist arrivals are still 80% or 20% below pre-COVID-19 situation. In other economies, tourist arrivals are still down 85% to almost totally 100% decline. This contributes to severe recession in tourism-dependent economies, especially in 2020, such as Georgia, Maldives, Thailand, and several Pacific Island economies. Financial markets actually has been stable, although we see some turbulence in a very early phase of the pandemic, March and April. But actually, left charts showing risk premium in financial markets shows the after this short-term turbulence, financial market seems to be stabilized up until now. And right-hand side chart shows the exchange rate movement. Orange bars in the right-hand side chart shows the majority of Asian economies strengthened actually their currencies against the US dollar since October 1st last year. Having said this, some currencies shown in the bottom of the right chart weakened against the US dollars during the in last 6 months or so, especially Lao Kip, Myanmar Chat, Sri Lankan Rupee, and several Central Asian currencies depreciated against the US dollars. So again, there overall seems to be rather strong recovery, but at the same time, we see a big variation. So looking forward, so having seen this last year's performance, basically, looking forward, outlook for growth is overall positive for Asia. Last year, developing Asian economies overall contracted by 0.2%, first-time contraction of the economy in last 5 decades. And then this year, progress on the vaccination rollouts and recovering global demand will foster rapid economic recovery in developing Asia. So after all, we forecast growth of developing Asia will be 7.3% this year. And this is much higher than the average growth before COVID-19. Region growth will moderate to 5.3% next year. But growth trajectory, as you can see from this chart, this table, trajectory of growth will not be uniform across the sub-regions. Central Asia, South Asia, and the Pacific are projected to see moderate growth this year and then picking up next year. In contrast, East Asia and South Asia will show very strong growth rate this year and then moderate next year. We can see a divergent recovery paths, not from the growth rate, but from the level of GDP. Left-hand chart shows the overall developing Asia's GDP trajectory. So we can see a mild contraction last year, and then this year we see a strong rebound. But still, GDP level this year and next year will well below the pre-COVID growth trend. In other words, recovery will be incomplete over 2 years horizon, this year, next year, which is our Asian Development Outlook's forecast horizon. As a divergent path, we can see China, second chart from the left, green line, looks very good recovery trajectory. There was actually no decline last year, growth deceleration, but no negative growth last year. And it will get close to the trend by next year. So China seems to be very good. Contrast that with India, which is a blue, second from the right. This is India. India encountered a very large contraction last year. So despite a very sharp rebound this year and strong economic growth, 11% growth this year, but GDP level still remains well below its pre-COVID-19 trend. And for rest of Asia, right-hand chart showing that contraction last year was not so sharp, but the rebound is also more modest. So this is the overall growth trajectory. So now let me share with you one slide talking about inflation. Inflation in the region will remain muted during the forecast horizon this year, next year, despite the rising international commodity prices. Substantial slack in many economies will keep a lid on inflationary pressure. Average inflation in developing Asia is forecast to fall to 2.3% this year from 2.8% last year. This is driven by a lower food price inflation, especially in India and PRC, two largest economies in Asia. Prices are forecast to rise slightly by 2.7% next year. And what's the source of risks in forecast horizon? The current environment is highly uncertain, and risks remain tilted. Overall risks remain tilted downside. The main risk to the outlook is unfavorable evolution of the pandemic. Significant and protracted outbreak may require renewed mobility restrictions in Asia. Vaccine rollouts may also face challenges in procurement, deployment, vaccine hesitancy, or weaker effectiveness against the new variants. Other downside risks include the geopolitical tensions, especially between the US and PRC, political turmoil, supply chain bottlenecks, and tightened financial conditions, including a possible repeat of a taper tantrum triggered by the US. There is also the risk of longer-term scarring from the pandemic. So now I'd like to switch to the second half of my presentation. Actually, second half, before talking about green finance, inclusive finance, I'd like to briefly touch upon maybe 2 minutes, 3 minutes. I'd like to share with you special analysis in this report, which examines learning and earning losses arising from pandemic-induced school closure. So let me move on to this short study. Actually, as you all know, COVID-19 pandemic has severely disrupted education and schooling. In Asia and Pacific region, schools were closed to varying degrees, as you can see from this chart. In a quarter of regions' economies, schools were closed for 200 up to 300 days last year. In another fifth, they were closed for a year or more up until now. only a handful of economies managed to keep school open continuously, especially in the Pacific region, which is shown in the right end. Remote learning strategies were used, but many students are constrained by a limited access to computers and the internet in developing economies and developing countries in Asia. So our analysis finds students in Asia have so far lost 29% of a year of learning on average. And the learning losses there is a variation across the region, but South Asia, where the lockdown and school closures have been longest, students lost 55% of a year of learning. In contrast, schools mostly stayed open in the Pacific, where learning losses were relatively low at only 8%. Then learning losses will generate the negative consequences in earning capacity in the future of today's students. So we estimated what's the likely losses in terms of income. Our estimates show students affected by school closures stand to lose average of $180 or 2.4% income decline annually as expected income. So $180 per year per student future earnings. We aggregated up for assuming 45 years of working in the future, and also aggregated up across all the member countries, developing member countries for Asian Development Bank. Then a total amount, discounted sum of lost earnings is as high as 1.25 trillion US dollars, which is 5.4% of regional GDP in year 2020. And these learning and earning losses will increase the longer the school remain closed. So actually, this is a baseline computation. But if COVID crisis continues and closure will continue, then actual lost income will be much higher. So I think this needs a really close policy attentions to tackle this negative consequences of school closure. So now, finally, I'd like to talk about long-term issues, medium and the long-term issues. This year's ADO's theme chapter about financing a green and inclusive recovery, which explores the drivers, impacts, and prospects of green and social finance in Asia. First, let me start by saying that the COVID-19 pandemic has disproportionately affected the vulnerable segment of countries and economy in Asia. It also shows Asia must plan for high impact risks, the bigger of which is climate change. And so now building back better, meaning that the building back greener and building back more inclusive, this requires actually large amounts of capital investment. As this chart shows, Asia Pacific region needs to invest 1.5 trillion US dollars or 4% of regional GDP annually in order to achieve SDG goal by 2030. And this 1.5 trillion investment requirement in different areas, green energy, poverty reduction, health, digitalization, biodiversity. These numbers were estimated by UN SCAP before COVID-19. So I think now 1.5 trillion should be considered as a lower bound necessary funding to achieve SDG and achieving building back greener and building back more inclusive. So 1.5 trillion US dollars annually. Actually, with government revenue declining during the pandemic, private capital needs to play a more important role in financing this large amount of investment in financing green and social investment. So green and social finance financing instrument designed to promote environment and social goals will play a very, very important role. Actually, these are the last few years data. Green and social finance is actually expanding quite rapidly globally, and Asia it has been leading the expansion in emerging markets. As Asia accounts for around 1/5 of the global green bond issuance. Left chart showing overall global bond issuance, and bottom blue part is Asia, and 20 or so percent of total green bond issuance is explained by Asia. And the right chart shows the excluding multilateral institutions, Asia now second largest regional social bond market after Europe. So right chart shows the social bond market, market size, and Europe supranational meaning international organization. So Asia is second if we exclude the multilateral institutions. And also right chart, yellow shows the 2020, and we can see suddenly a surge in social bond markets size in year 2020. One quite important driving force of this fast expansion in green finance left and social finance in the right chart is actually changing stakeholder preferences. For example, more investors now want to invest to perform well, but also be a good force for good. So currently 30 trillion or 1/3 of all investment managed globally is guided by ESG objectives and principle, environment, social, and governance principle. And also on supply side, firms are tapping green and social finance in order to protect against sustainability risks. And also firms are trying to attract patient investors, generating a greater resilience through downturns like the current pandemic. So in this same chapter of Asian Development Outlook report, we did several empirical analysis using country-specific information or municipality-specific information or even firm-specific information. Actually, financial motives driving companies and investors towards the sustainable activities. This suggests growth of green and social finance can be sustained. So left chart shows the after Australia ratified the Kyoto Protocol in year 2007, and the government imposed restrictions on annual emissions, then debt and equity cost of high emitting Australian companies increased by 5.4% and 2.5% respectively, relative to low emitting Australian firms. So there is a direct financial consequences of being not complying with the Kyoto Protocol at the firm levels. And also tapping green and social finance help firms gain a positive investor recognition and a positive investment, attract a positive investment. Asian green bond issuers, common stock experience. So those Asian companies issued a green bond actually also achieve a higher return in equity and 0.5% cumulative abnormal return during the 16-day period around the announcement of a green bond issuance. So that's according to our data analysis, which means annualized abnormal returns of 8% if a company announce green bond issuance. So this is also tangible financial returns if a company really go for a green investment. And not only companies' performance, but also this same chapter provides a new evidence. Green and social finance generates overall positive environment and social impacts. Left chart, Asian firms that issue the green bond actually improved their average environmental performance score by 17% and 30% over 1 year and 2 years after green bond issuance. And this is based on company environmental rating from Thomson Reuters, ASST4. This database, actually we can capture overall environmental performance. And using this data, we show green bond issuance actually achieve a better environmental performance. This report also finds cities in China that issue more green bonds see significant improvements in air quality. And also this also leads to a health benefit of that municipality. So actually we also observe not only immediate financial returns and cost returns, cost implication, but also overall environment target can be achieved by investing in the green. Innovative instruments like impact bonds also help to achieve not only green, but also social impact efficiently. So the right-hand schematic shows the typical social impact bond, where investors share the risk of a green and social investment with the public sector or donors and service providers. One successful example of social impact bond in developing Asia is Educate Girls Development Impact Bond in India. So not only green, but also social arena, there has been a quite innovative market instruments getting available. Multiple funding sources can complement and catalyze private capital to finance green and inclusive recovery, because at the beginning I said that 1.5 trillion US dollars financing annually is needed. And so actually multiple instruments really play a key role to meet this investment needs. Fiscal revenues for SDG-oriented public spending remain indispensable for the pursuit of SDGs. Microfinance programs and carbon pricing schemes are both useful instruments to achieve SDGs. As shown in the right-hand chart, there is a growing momentum for usage of carbon pricing instrument in Asian Pacific region. Multilateral financial institutions such as ADB can also foster green and social finance by participating in and also developing the market via investment, catalyzing additional capital, and providing knowledge solutions. So this is the really rapidly developing area. So far I focused on role of private markets, but this is the final slide. I'd like to also briefly touch upon the policies that can support social and green finance market. So left part of this chart showing that basically legislation and regulation can help align finance with SDGs while also safeguarding financial stability. Policymakers need to develop and enforce a common standards for information disclosure and impact measurement that are aligned with the existing international standards and promote a sustainable finance as a regional agenda. And government can incorporate sustainable risks in a micro and macro prudential framework. And also government can help strengthen market infrastructure and ecosystem. So this basic fundamental market structure and setting common standards and measurement, I think that's a really indispensable precondition to support private markets for green and inclusive finance to flourish. At the same time, right hand, sorry, this I forgot to. Yeah, I forgot to scroll my slide. Actually, this one, right chart showing a wide variety of funding for green is getting available, carbon tax, emission trading system, etc., in Asia. And now I'm talking about this slide. So left-hand side of this chart saying that market ecosystem and market infrastructure is very neat, and government play a key role to nurture such a basic market infrastructure. And then right hand of this slide shows the government and public sector itself can expand the resources by mobilizing domestic tax revenue. Possible actions broadening and protecting domestic tax base, and also enhancing tax compliance, developing more transparent, efficient tax administration, and also strengthening international tax cooperation. So domestic resource mobilization through building up a capacity of taxation and mobilizing domestic resources, that's really needed to expand the fiscal space, government fiscal space, so that green finance and inclusive finance can be also supported by public funding. And also in Asia, economic recovery for Asia means more and more foreign investment will be flowing into, and especially big tech giants making a lot of profit in Asian markets. So it's very important for the government to engage international tax cooperation, so that this investment government can tax properly, and that tax revenue can be reinvested into green and social finance. So this is a policy options for nurturing green and social finance in Asia. And the final slide is basically recapping 5 points I already mentioned at the beginning. So I think I will stop here, and I'm very happy to respond to any questions, comments. Thank you. Thank you very much.
Thank you very much, Dr. Sawada. So we will continue with short comments by our esteemed panel. So members of the panel are Beam Adhikari. He is a senior program specialist at Canada's International Development Research Center, IDRC. Then we have Jessica Villanueva. She is with MEDA and an expert on impact investment. And then finally, we have Daniel Fuentes. He is a senior product manager at MEDA's Trading Up program, a collaboration between MEDA, Global Affairs Canada, Sarona, and the University of Waterloo. So I just continue. So Beam Adhikari, could you maybe provide your response?
Thanks, Olaf. I don't know how much time we have, because it looks like we don't have enough time. So thanks, Dr. Sawada. Is a very comprehensive presentation, and then so many things I think you presented that resonates very well with the IDRC. Some about thinking as well. So we have new strategy, and a lot of things you mentioned I think is going to is very relevant to us as well. So I'll mainly focus on the green and social finance kind of side. So I'll leave other colleagues to comment on the rest of them. So I'll start with more on the public policy side. So on the public policy side, I think the one bigger issue here is the transition finance. How we really go about this goal of carbon neutrality or kind of low carbon commitment. So far, only if you look at the global, I think the green financing landscape, we have only like a 20% maximum, can be considered as a green finance. Almost 80% of investment is still coming from the non-green or like a brown sector. So the question here is how you really go about kind of transforming that 80% investment towards the low carbon development kind of trajectory. So obviously we know that the financial system obviously will not automatically correct some of these challenges. So I'm kind of wondering how the bank is going to really engage with the member country, and in terms of really transforming that 80% of the kind of brown finance or non-green finance. So that's my first one. And second, you also mentioned about this kind of carbon tax issue as well. Carbon tax is very politically challenging in Asia. Still, there is a lot of political resistance there. And even some countries who have a carbon tax, like we have Japan and Singapore, for example, the tax is very, very low. Like they are about like $5 I think per ton. So this is politically very, very challenging. And on the other hand, if you look at the subsidy, particularly environmentally harmful subsidy, I think that's where perhaps I think we should be kind of thinking as well. Still, even if you look at the COVID recovery package, G20 already provided more than 150 billion for the carbon intensive sector. So how really go about the subsidy? For me, I think subsidy reform looks like even more important than the, jumping to the carbon tax. So that's something I don't know what's going on in the bank, and then nice to hear a little bit your reaction as well. So what is your thinking on the the subsidy reform? And on my second point on the private sector side, so we know that the ESG investment is rising, but at the same time, I think these ESG investment are more like managing the risks, rather than the creating positive impact. And on the other hand, we have like impact investing. I think at least they are very kind of pretty much impact kind of focus kind of investment there. But there as well, we have problem because we didn't have a good bankable projects, and the bankability of many of these green projects is a very low compared to the like energy or those kind of project. So how we really go about attracting the private investment there, and how we go about kind of addressing some knowledge and these capacity gaps. But also I think that's the one area as well we need to kind of think about. For example, like if you look at a nature-based solution compared to the solar energy, for example, we still don't have desired level of kind of investment there. So that's the other challenge I see. And also for the SMEs, we have like a low-cost financing kind of option as well. But there's not enough capacity for the this small enterprises to come with the bankable ideas. So that's my third point. And my fourth point on the more like a gender lens investment. I'm sure that you have a lot of disaggregated data there, but I didn't see much what is going on the more like a gender side. How you really go about transforming this green finance to make it more like a gender kind of impactful investment. So I think this is a very important issue, and I don't see that in the report, or maybe your presentation, maybe it's in the report. So at the end of the day, I think the green finance has to have impact at the local level. And then also is an opportunity for us to address the gender inequality as well. So on the gender side, I didn't see much. And the also quality versus quantity of finance. I think so far, I think our focus is most on the kind of quantity of finance. That's for sure, because there is reason for that. We need more money. But at the same time, I think we don't see, that much kind of attention to the quality of this finance. What really impact, this finance are creating at the ground level. So that's something I think we need to look into as well. And sometimes we might be adapting, but might not be adapting, actually might be maladapting there as well. So I think some of those, I think the quality versus and quantity of finance has to be kind of on our discussion as well. And the finally around the taxonomy as well, because still, although there are a lot of the reporting and disclosure standard, I think people are working on that, but not all the green finance are kind of, they are really green, because we have seen a lot of the so-called green finance also contributing to the major carbon kind of emission kind of activity as well. So how you really go about really kind of coming with a more defined kind of reporting standard, and also like a disclosure as well, because most of the time companies tend to report only the green finance, but they are not, I think, disclosing what is the amount of brown finance really actually contributing to the to the carbon side. So I think it's just kind of balance here. We really need to think from that way as well. So yeah, I think these are some of my quick thinking, and unfortunately we didn't have time, so we have other speakers as well. So I'll stop here and over to you, Ola. Thanks.
Thanks a lot. Yeah, so Dr. Sawada will respond to the comments at the end. And so let's have Jessica next.
Thank you, and thank you for inviting MEDA to be part of this conversation. And let me start reinforcing the nexus of gender and climate when talking about a green and social recovery. So at MEDA, we recognize the critical role women have to play in addressing climate change and environmental degradation, but they remain underrepresented, both in key decision-making positions and as users of capital. So the presented flows into climate-related projects represent an amazing opportunity to scale up gender lens investing in this region and to merge the gender equality and social inclusion and environmental and climate investment agendas with the power to activate untapped potential and amplify impacts, whether one leads with climate or one leads with gender, and across many sectors. Also, ESG is critical to business resilience. COVID has demonstrated us that shocks exacerbate inequalities. It has been well documented that in times of crisis, including COVID, women-led businesses face additional constraints, like increased gender-based violence, increased time spent on caring for children who are not in school, and sick family members. So this impact on their ability to run their business. MEDA developed the gender equality mainstreaming framework that builds on the environmental, social, and governance investment standard by mainstreaming gender across the ESG criteria. And based on this experience delivering gender ESG specific technical assistance to fund managers and businesses, fund and companies have increased awareness and adoption of business policies and practices. So moreover, a gender ESG lens must focus on process, not just on outcomes. Consequently, fund managers require not only capital, but also technical assistance to develop a robust gender ESG lens and contribute to gender equality and environmental outcomes, and to build resilience. As it is stated in the report, these considerations help them to better identify non-traditional risks and opportunities and recover from shocks and stresses. The report talks about the importance of impact measurement and the lack of a standardized approach to measure the impact of green and social finance. The report recommends regulations that enforce common standards for impact measurement and information disclosure as one of the policy options to support the development of green and social finance. My question is to understand the feasibility of that approach, considering different contexts and capacities that countries may have. How will that policy impact the private sector, actors working in the green and social finance sphere? I'm going to stop there and allow my colleague Daniel.
Daniel, please go ahead.
Yes, thank you, Jessica, and thanks everyone for the space and the opportunity. Building on Jessica's points, and perhaps an extra one, namely the nexus between gender and climate action, number one. Second, mainstreaming gender considerations within an ESG framework. And third, an extra one, perhaps, that revolves around how important it is to build financial and non-financial leaderships. And MEDA, from our perspective, these points can actually be linked to many of the bank's recommendations and observations of, in particular, of the theme chapter, financing a green and inclusive recovery of in the Development Outlook 2021. At MEDA, for example, we're launching in the Philippines a project with the very generous support of the Canadian government that aims precisely at building resiliency and inclusion by leveraging MEDA's own risk capital fund or own investment funds, precisely to mobilize the domestic resources as stated by the bank, which is very important. And we're accompanying these investments with MEDA's own technical assistance to strengthen and support local capacity around gender equality, ESG, and impact measurement and management. Perhaps also linked to the bank's very beautiful observation, I might say, that, quote, sustainable development needs to be embedded in the financial system, end quote. In our experience, when you accompany, again, investment capital with capacity building and technical assistance, we think that there's an opportunity to moving financial intermediaries that we're working with from exclusionary criteria to actually ESG incorporation and integration. We find, for example, in a project we're managing called Trading Up, that the investment funds we're working with like the taxonomy of ESG, but they don't know how to move forward in terms of integrating these and moving beyond exclusionary ESG criteria. So again, and lastly, strategic partnerships are extremely relevant when it comes to sustainability and inclusion, we believe. In the publication of the bank, many examples of innovative partnerships are discussed, including impact bonds, green bonds, social finance, etc. And again, quoting the bank, quote, it appears that once people become more aware of specific SDGs, they pursue broader ESG practices and change their behavior accordingly, end quote. So I would be curious to hear your perspectives on how these financial intermediaries, these banks, these partners have actually changed their behavior post the implementation of these innovative partnerships. Have they changed their behavior towards a more ESG centric practice? So that's about it from my part. Thank you.
Thanks a lot, Daniel. And with a look at the time, so we have 5 minutes left. I think if we summarize, and also if I have a look on the questions that are coming in, maybe Dr. Sawada could talk maybe about the connection between green finance, social finance, gender equality. I think this is a question that came up also that came up in the panel and in the Q&A. So maybe you can address this, and then of course the other questions as well.
Thank you very much for the really critical questions, important comments. First of all, I'd like to say Asia achieved, actually last year, January last year, we published a book titled Asia Journey to Prosperity. That's a 530 pages book, kind of tracking what happened in Asia in the last 5 decades. And that book has thematic chapters, structural transformation, agricultural development, industrialization, technical progress, external trade, etc., etc. But I'm happy to say we have a chapter on gender, and also separate self-standing chapter on gender, and also self-standing chapter on environment and climate change. And actually, that book is available for free from ADB website. So I really highly recommend, because we have a lot of very focused charts to show what happened in Asia. Actually, Asia's really phenomenal growth, as we all know, in the last few decades, has been actually built on growth first, and then clean up later, clean up and environment later strategy. And actually, according to the latest information, as you may all know, Asian Pacific region emits around half of global greenhouse gases. And also, still, Asia's energy source is more than half generated by coal power. So still, Asia is a very, very brown economy. But having said this, this means there is a huge room, potential, huge room for the region to make COVID recovery really green and climate resilient. Carbon tax is still a public domain, and issue is how to facilitate more private sector involvement, and also I think how to tap private finance. Actually, ADB has been a critical role, actually separated from a green issue, but in general, capital market development is quite still underdeveloped in Asian Pacific region, developing Asian Pacific region. So how to nurture more domestic capital markets is quite critical. If we look at financing flow, Asia generates a huge amount of wealth, but somehow this wealth invested outside Asia. So that indicates, lack of really, functional capital markets. So after, this fundamental issue became a crisis in 1997, 98 as the Asian financial crisis. So after that, ADB has been really playing a key role to facilitate local currency bond market development. And actually, size of a local currency bond market reached $20 trillion end of last year. So I think our support has been very successful, and especially ASEAN +3 framework, finance minister and central bank governors process we support. And this Asian bond market initiative, so-called ABMI, actually we really shifted the emphasis on facilitating green finance and social finance, green bond issuance and social bond issuance. So with that, I believe ADB can play a very important role. And one example in the Philippines, there is a geothermal, private sector geothermal project, and ADB helped issuance of a local currency, peso bond to finance this geothermal plant, AP Renewable. That's the private company. And so this is one example how ADB can be facilitator of mobilizing local currency and financing green investment. Also gender, ADB set the strategy 2030, next 10-year strategy 2 years ago. And we have 7 priorities. One of the 7 priorities is gender. And ADB has a explicit criteria until 2030, year 2030, more than 75% of ADB project should be mainstreaming gender. So all the sector, all the theme, and all the operation, basically, ADB now emphasize gender. And so in any case, facilitating this whole process of a more green recovery and more inclusive recovery focusing on gender, ADB is now targeting to deliver 80 billion of cumulative climate finance up until year 2030. So 80 billion US dollars, that's the resources ADB already started providing. Year 2020, we committed last year 4.3 billion, still a little bit small scale, 4.3 billion, 3.5 billion devoted to mitigation, and 0.8 allocated to adaptation. Additional 729 million was mobilized from external resources. So this year we expect this funding for climate finance will be expanded. And also, so far we see weight on the mitigation is much larger than adaptation. So I think in the future we should put more emphasis on adaptation. And this financing, when it comes to each project and each programs, I think gender aspect will be an indispensable component. And so I think this is the ADB support. And also our energy policy is kind of obsolete, set around 10 years ago. So now this year we are updating energy policy. So more granular policy component will be properly set and to be shared soon with the public audience. So I think these are the things ADB has been supporting green and inclusive recovery, and also a broader achieving climate goals. So I think this is my quick response to. I'm afraid I couldn't respond to all the questions, but I'm happy to interact later on through emails. And also, if a participant needs more information, and also if questions, please do not hesitate to send me an email. My email is ysawada@adb.org. So please do not hesitate to send me an email. Thank you. Thank you very much. Over to you.
Thanks a lot. This was excellent to answer these complicated questions in that short time. This was really great. And the responses is very much related to the questions we have in the chat. But also, so I want to finish with that. So thank you all for attending today's seminar. So there will be a link posted at the University of Waterloo's event website following this event. As Dr. Sawada also announced, you can email him directly if you have any specific questions. So I want to thank again you, Dr. Sawada, for providing us with this outlook, with this very interesting view on the next year. And I also thank our panel, Jessica, Beam, and Daniel for the great questions and great comments, and of course all the participants. Thanks a lot for joining this webinar. And please reach out to Dr. Sawada or to Laura Schwartz, so you find the information in the in the chat box. So thanks again for attending, and I wish you all a nice rest of the day or evening, depending where you are. Thanks for attending, and goodbye.
Thank you. Thank you very much.
Thanks, everyone.
Thank you.
Bye.
Stay safe and stay well. Thank you.
Bye.